Hello. So I'm here today to talk to you about FHA loans. FHA loans are a great option for first-time home buyers and for people that are looking to limit the amount of money they need to put down on a down payment. If you have a FICO score of at least 580, then you can put down as low as 3.5% on an FHA loan, which is fantastic. However, if your FICO score is between 500 and 579, then it's at least a 10% down payment. Many people tell me that, well, we have a credit score above 600, and we've not been able to find a lender that's going to lend to us. And this happens. Banks have overlays, which is a fancy industry term for rules that they have for their loans. They won't lend out money based on their own rules, not necessarily the FHA's rules. So if you're having issue, contact me and I can get you in touch with local lenders that have less stringent overlay requirements, and that could help save you a bunch of money. All right, so FHA requires that you purchase the home as a primary residence that you plan to live in, and there's really no way around that. That doesn't mean that it cannot later be turned into a rental property, a second home, or a vacation home. It just means at the time of purchase, you are going to be living in it and you plan to live in it. And you do live in it. All right, so mortgage insurance, also known as PMI. PMI is often spoken about in a negative way, and it is a monthly cost that homeowners have to pay. If you put down less than 10% on the property, you will have PMI for the lifetime of the loan. And this could be a big issue. However, it is often not, as you are able to refinance out of that loan into a conventional loan as soon as you have the amount of equity needed in the property. So say you bought the property for $100,000 and with prices rising, it went up to $120,000 in market value. You know, you would easily have the 20% equity buffer in that instance, even if you put down a low down payment on your initial purchase. So you know that can save you a lot of money if you refinance out of the PMI. Definitely something people should look into. So debt to income. How much monthly debt do you have compared to the monthly income you bring in? That's what they're looking at. FHA allows a higher debt to income ratio than conventional loans, which is great. I've seen as high as 56% on debt to income on FHA loans. That's not typical, and I don't necessarily encourage that. You should keep in mind you probably need closer to 45% debt to income ratio. It is worth talking to a mortgage professional when calculating these ratios. You know, I don't do it myself. I would have someone more knowledgeable than myself calculate my own ratios, as you don't want to make a mistake in such an important calculation. All right, so employment. They're looking to see you've been working in the same industry for 2 years, and they're looking for consistent income. They don't want to see income that is going down year on year. It can be going up, obviously. They don't mind about that. If you changed a job in the same industry, say you got a promotion or you went to a rival or competing company, but you're still in largely the same industry, then that's not going to be an issue. They're mainly looking at people who, say, someone who was a server, who became a real estate agent, who went into teaching, and now is back as a server, and they're looking to, get a mortgage, and the bank looks at that and says that's inconsistent. And that's been inconsistent. All right, so honestly, it's a tough market to use FHA. A lot of people are coming in with higher down payment offers where they're putting a higher down payment on their loan, and therefore the chance that they're going to not not close is seen as less by many sellers. And there is also the chance that buyers could be using cash. So it's to be honest, it is a tough environment for FHA buyers, which makes it more important than ever that you go out and get qualified in advance so that any issues can be taken care of ahead of time. Some people do not get approved the first time, and they have to go back and make some adjustments. And it's a great way to find out what you need to be doing to move forward. So, all right, I hope you have a great Wednesday, and talk to you soon.